Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Connor Campbell, who's a financial analyst at Spreadex. And, well, in a week where there are no UK corporate results, or certainly none of any note to talk about, we're going to draw our focus now to some US names that are reporting. But just one thing, do you think investors, certainly US investors, will be looking at particular results, or is it the overarching US tax reforms that is going to be the driver of markets this week?
I think there will be some focus on, the fairly big companies. The quarterly reports are fairly important. However, I think whilst there will be focus on these quarterly reports, a bad quarterly report might get lost in the shuffle a bit. I think it's, a positive quarterly report probably will give it a bit of extra steam, but I think anything slightly more negative could sort of just get, brushed aside in the face of sort of any rampant growth post-tax bill success, really.
Well, let's focus in certainly a bellwether of the US economy, FedEx. Without actually seeing this against the market, I'm guessing this has outperformed. Certainly a strong year so far. Can they continue to push higher?
It's interesting that those levels above $240. That's an all-time high. It's had up 30% this year. That's a very, very strong year. Even though its first quarter, Q1 2018 figures in September were pretty awful. It got really hit by the NotPetya cyber attack. That was mainly hit TNT Express, which is his European arm. I think that cost FedEx $300 million, which equated to 79 cents per share, which is pretty massive.
Yes.
Also hit by Hurricane Harvey. That lopped off another 2 cents per share, which compare that to how much got cost by that NotPetya attack, and that's crazy. Everything else is, everything else sort of then was spoilt by that. I think net income was down 16%. Adjusted EPS came in at $2.51, which was way short of, I think it was like the $3.09 that was looked for by investors. Revenue was up 4% to $15.3 billion, but even that was $500 million short of what was expected. The real kicker was that it sort of drastically revised its full-year diluted earnings per share forecast. I think down from $12.45 to $13.45 to like $11.05 to $11.85. So that's a significant revision. However, as sort of we were saying at the start, the wider situation in the US, sort of the rampant growth from the US indices, mainly due to the increased likelihood of the tax bill going through before the end of the year, I think quickly blew that away, and it didn't really matter. In terms of its second quarter figures on Tuesday evening, I think revenue is expected to rise, I think 4 or 5%. To $15.7 billion. Earnings per share is meant to be up from 280 to 288. So decent figures. Whether it's enough to keep it at its highs, I'm not sure. Our clients are buying around that 240 mark. Again, though, is that because of the strength of FedEx itself, or is it because of the current situation in the US? But if it could just hit those expectations, there's no reason why it can't keep at that 240 mark. Really heading into the new year.
Okay, good stuff. Moving on, General Mills. It's a bit of a roller coaster ride, certainly from a chart perspective this year, not for the faint-hearted. What can we expect from General Mills? Yeah,
it's a sort of stock stuck in the changing grocery sector in the US. It's packaged foods, it's stuff like Lucky Charms cereal, Trix. In Europe and outside of the US, it produces Haagen-Dazs ice cream. So it's that kind of packaged, super sugary, really bad for you foods that consumers are broadly moving away from. You can see that in its first quarter figures back in September. The cereal division saw a 7% drop in sales. I think the cereal sector as a whole is doing so badly in the US that it might start to lose shelf space, which is obviously a sign that it's doing very poorly. That sort of, cereal's a big deal for General Mills, so that's sort of a knock-on effect to the rest of its figures. I think organic sales were down 4% to $3.77 billion. That was short of the $3.79 billion expected. Adjusted diluted earnings per share, they fell 9% on a constant currency basis to 71 cents. That was 5 cents short of what was expected. So again, really sort of unpleasant figures. That left it around those lows in November. That was a 3-year low. So really not doing good, despite this sort of suggests that despite the wider situation in the US, there is room for bad news to stick. Even though I say that, then it did see, you can see in recent weeks it has seen quite a sharp rebound. Part of that rebound's down to it reiterated its fiscal 2018 full-year forecast, which, given how poor its first quarter figures were, I think that sort of reassured investors. I think it's looking for a 1 to 2% slide in organic sales for the year, but that should be countered by a 1 to 2% rise in adjusted earnings per share by the end of the year, which leaves it sort of the forecast for its second quarter figures on Wednesday into a bit of a. It might end up disappointing. I think revenue is expected to rise 1.2% to $4.06 billion. That's basically smack bang what it promised for the full year. However, earnings per share is expected to fall 3.2%, which is far worse than the forecast for the year. So I think, given how sharply it has climbed in the last month or so, that if it does end up seeing that quite sharp drop in earnings per share, then it could be pulled away from that $58 mark.
And do clients, are they long short this?
They're short. They're selling around that $58 mark. I think it's climbed quite sharply and is looking for what does seem to be is going to be a fairly negative second quarter report on Wednesday evening. But again, like we said, that comes with the caveat of if that tax bill is passed by the time it released.
And it feels like it could be a bit of a black or red, judging by the chart over the week. So maybe a 50-50 one on that if you fancy a punt, flip a coin. Finally, Nike, however you want to pronounce it, a bit of a swoosh to the upside on the chart this year. It seems to be going great guns. They're getting their shopping order.
Again, I think specifically, you can see where it's sort of really broken out, and it's been around the mid-November mark. So since the tax bill began to gain momentum. Because before that, it's been a bit all over the place. You can see just at the start of that chart, it jumped 10% at the end of June. That's because it finally announced that it would be selling its merchandise directly through Amazon and Instagram, which was a pretty big step. Then a month later, it basically lost all of that on pretty shoddy reports from Foot Locker and I think Hibbett Sports. So, companies that Nike relies on to sell their footwear, basically. In terms of its first quarter figures in September, they weren't great. It posted its slowest quarterly revenue growth for 7 years. Sales were basically flat around the $9 billion 07 mark. Earnings per share plunged 22% to I think 57 cents. However, that was still significantly higher than the 48 cents that was forecast. So I think Nike is trading on beating low expectations at the moment. Because similarly, I think its second quarter figures on Thursday, revenue is expected to be up 2.6% to 8.39 billion, which that's pretty healthy given that it was flat for the first quarter. But earnings per share again is expected to plunge 22% to 39 cents, which is pretty ugly. However, I think if it can beat in the way that it did in the first quarter, then investors might be willing to overlook that sort of earnings per share squiff. I think also it depends on what kind of outlook it gives for the holiday season. What kind of figures can investors expect the other side of Christmas and the New Year? Our clients are sort of buying around the $65 mark. I think it's sort of, it's part of the Dow Jones. It does stand to benefit greatly from if this tax bill goes through. So if those figures aren't too great on Thursday, then might be ignored. I will say though, I think if the tax bill goes through on Tuesday night, and people celebrate on Wednesday, Nike's results aren't until Thursday, so it depends how long investors are willing to piggyback on that tax bill success and keep sending the global indices higher, or whether if that's petered out by then Nike's sort of potentially weaker figures might become a bit more of an issue for the stock.
Good stuff. All to play for over the coming days. Certainly the US tax bill will gain a lot of interest. Let's see if they can finally get that done by the end of the year. But on that note, Connor, have yourself a great Christmas and a Happy New Year. Thank you for joining us here on Call.